Welcome to the Capital News. I am your host, Alex Karitis. Today is Tuesday, July 21st, 2020. Thank you so much for joining me. The title of today's podcast, Gold and Silver Making Moves! Exclamation point. I truly believe this is the real beginning, the real start of what is likely going to be some explosive moves to the upside with respect to gold and silver, and some other metals as well. Several percentage point gain in the price of silver alone today. What's going on? Markets are supposed to be forward-looking, right? That's how they're supposed to behave. They're supposed to look out. The question always is, how far out are they looking? How far out is the stock market looking? How far out is the bond market looking? The commodities market, the precious metals, currencies, anything? That's always the question. Is it 1 month? Is it 3 months, 6 months, a year? Some people say, well, it could be a couple years. Nothing is perfect. Markets are not perfect because markets are people. It's us. We are not perfect. We can't predict the future, especially not with a great deal of accuracy. We can look at trends. We can make conclusions. We can make inferences as to what we think is going to happen, and we behave accordingly. It's the best we can do. But with respect to gold and silver, what is this market sniffing out? Does it understand the fundamentals? And it does. Does it understand the fundamentals of monetary policy? Does it understand interest rates? And again, the answer is yes. And more importantly, real interest rates. So again, you have nominal rates, which is what they will tell us. That's what's publicized. Federal funds rate, for example, basically 0% or 25 basis points. So that's your nominal interest rate. You subtract from that the inflation rate, and whatever that comes to is your real interest rate. Well, that's going to be negative because we have a positive 25 basis points minus a positive inflation rate. So that's going to take us into negative territory. And we've been saying here for months that real rates, especially real negative interest rates, are going to be the mother's milk for gold and silver prices moving forward. And a lot of this, of course, is a function of an out-of-control banana republic central bank. Central banks, plural. The Federal Reserve with the balance sheet of $7 trillion, and it's going to explode higher as well because the debates in Washington, D.C. are how much more do we spend? I received an email the other day from my congressman with a questionnaire, a few questions. What would you like to see in the next stimulus bill? And not to my surprise, there was not an option. There was not an option that said enough is enough. No more quote-unquote stimulus. Let the markets do their thing. That wasn't an option. In the United States of America, in a supposed, of course we're not, but in a supposed free market capitalistic system, that should have been an option, and it wasn't. Do you want to see payroll tax cuts? Do you want to see unemployment extended? Do you want to see money go back to infrastructure, back to the states, back to localities? What do you want? Where do you want all of this banana republic funny money to go? You're going to be paying for it. You're going to be paying for it dearly. Free was never so expensive. And that, my friends, ladies and gentlemen, is what I believe gold and silver are starting to sniff out. They're starting to realize. And it's really people that are starting to realize this. People are starting to scratch their head. They're starting to wake up. They're starting to say, yeah, all this money, We borrowed $3 trillion in the second quarter alone. We're on track to have a $4 trillion deficit this year alone. The monthly deficit for the month of June was $864 billion alone, an all-time record and not something to pat yourself on the back for. And we still have 2 months to go. We have all of August and all of September when we conclude fiscal year 2020. So how much more are we going to spend? Another trillion? Where is that trillion going to go? What's it going to go into? More stimulus payments? Maybe you're going to get another check for $1,200, what have you? An extension of the $600 per week? Maybe they'll roll it back a little bit. Maybe it'll be $500, $400, $300. Maybe they'll means test it against what you were making before. Going to go back to states to make up for their shortfalls? Go back to cities to make up for their shortfalls in funding and tax revenue? The pensions, right? Got to bail out the pensions too while you're at it. What about infrastructure? Is that going to be another trillion, $2 trillion for that? Where is all of this money going to come from? We don't have it. Uncle Sam doesn't have it. Your state government doesn't have it. Your local government doesn't have it. So we got to print it. We don't have to, but that's the option that they're going with. That's the quote-unquote solution that they're going with, that they've been going with, and there's no end in sight. This is a political year. This is a presidential election year. President Trump is going to promise everything under the sun. Everything under the sun is very expensive. Former Vice President Joe Biden is going to promise everything under the sun. Everything under the sun is very expensive. Some of that, whoever wins, is going to have to make good on some of those promises. And I can assure you that it's going to be again in the trillions of dollars that we do not have, and we will not have, come November 3rd, 4th, 5th, 6th, January, February, March, April of next year, yada, yada, yada. Because if my analysis is correct, in addition with a handful of others out there, that we are in the midst of the greatest depression, we ain't seen nothing yet. And that's why we can have explosive moves in the price of gold, in the price of silver. It's the inflation, it's the stagflation, and depending on where you are, and it can most definitely happen here, the potential and maybe the realization of hyperinflation. We talked about the collapse of Lebanon. They are experiencing massive amounts of inflation. They are in collapse. They are in free fall. Venezuela has collapsed. They are in free fall. The sanctions that we have placed on Iran, the commodity picture as it is right now with the price of oil and the price of natural gas, is causing a collapse in Iran. Global protests before COVID-19, not transitory, but rather history in the making. They're going to pick up steam. They are going to get worse. They are unfortunately going to get violent. And the reason they're going to get violent is because governments, greasy and greedy politicians, are not going to resign. They will not be honorable. They will not step aside. So the people are going to forcibly remove them. That's what's going to take place in many countries around the world. We are going to see these protests turn into riots, these riots turn into government overthrows. And depending on the region, could be nation against nation, we could see some more hot wars. I hope that's not the case. I hope I'm wrong. But that's how I see it. Because we ain't seen nothing yet. We haven't seen the price tag for all of this. We haven't seen the effects of all of this money printing, of all of this begging, borrowing, and spending. Not just from the United States of America, but from the rest of the world. They're all doing it if they're capable of doing it, if that government is capable of getting away with it. Some can get away with it for the time being, and others cannot. Venezuela, Lebanon, Iran, a handful of others. They're not in a position to get away with printing money to get out of it for a little while. Now, what could potentially change my mind with gold and silver prices not exploding higher over the coming months and years? Well, it would have to be a structural overhaul of the system. Do you think that's going to happen? I don't. Do you think that the federal government is now all of a sudden going to wake up and say, okay, my fellow Americans, we messed up. We're done spending. We got to tighten our belts. We're going to have to sacrifice as a nation. We're not going to print money anymore. The Federal Reserve isn't going to buy treasuries. They're not going to buy commercial real estate through mortgage-backed securities. They're not going to buy residential mortgage-backed securities. They're going to retire in their entirety all of the emergency facilities that they have put into place, whether they're being used or not. They are retired. They're done. Fed isn't going to do it. Interest rates are going to go up. Do you think this is going to take place? And the answer is no, it's not. It's not. That's why you have a lot of tailwinds for the precious metal space. That's why you also have the possibility, because if you have a massive devaluation of the US dollar in addition to other currencies, then you can also have a massive run-up in the price of commodities. Not necessarily because there is a massive amount of demand for such commodities, but because the value of the dollar is being so greatly diminished. And that's another driving force for gold and silver as well. But gold and silver will also play a hedging factor. They might actually serve when all of the dust settles from all of this, whenever that's going to be. And I do believe it's going to take some time, meaning years. You're likely going to have a collapse of the dollar. People aren't going to buy into it. A country can't have what's going to end up being, in short order, a $30 trillion national debt, multi-trillion dollar deficits, and to say, oh yeah, I want more of that paper. Give me more of that stuff. I think the rest of the world is going to say, we're not taking it anymore. We're not going to continue to buy that paper. We're already starting to see it. So maybe, just maybe, when the dust settles, the world can maybe get together and it'll look for some sort of alternative. And maybe it'll go back to gold, maybe it'll go back to silver, or at least the people might. At least the people might. Because these pieces of paper in your pocket are going to be rendered worthless. Because as I like to say here, they are printing them like they're going out of style, because they are. And before they go out of style, all of the rats closest to the printing press are buying up as many assets as they possibly can. Buying up companies that they can on the cheap. Buying up stocks that are causing this melt up. A Federal Reserve that's purchasing corporate debt of the largest companies in the world. They're running away with the loot right in your face. They are printing worthless pieces of paper, and every one they print makes the previous one worth less and less and less until it all becomes worthless. But in the process, why people still think that these pieces of funny money have value, they're going out and they are buying everything. They are buying the real stuff. They are buying the commodities. They are buying the precious metals. They are buying companies. They are buying real estate. And while they're doing it, they have the masses distracted with Goya beans, wear a mask, don't wear a mask, statues, figurines. I'm not saying those aren't issues that you can pay attention to and form an opinion. You do what you want. I'm just saying, is that the hill you want to die on? A hill of beans. I'm saying I think there's some more important issues out there that you got to be focused on. Because you're going to be paying for all of this. Whether you have to wear a mask or not, you're going to have to continue paying for all of this. Whether a statue stays or goes down, you're going to have to continue paying for all of this. Okay? Whether you eat the bean, don't eat the bean, you're going to have to continue paying for all of this. You get it? There needs to be structural change. There needs to be structural reform. And my congressman, I can't speak for yours. I didn't get a questionnaire from yours. I got a questionnaire from mine. Clearly, he doesn't get it. He doesn't get it. He thinks evidently more stimulus. Where do you want it to go? You want bigger checks, smaller checks, infrastructure, states, local? Where do you want it? How about enough's enough? And my guy's a Republican. Again, it doesn't make a difference. Again, to my point, these people don't care about you. They care about their reelection. So let me pay you off. Let me give you more of that sit down, shut up money that you're so thirsty for. They can't afford it over in Lebanon. That's why it's in complete collapse. That's why the people are sick and tired of being sick and tired. And that government's going to get overthrown, as are many others, or attempted. But here, let's just give you some of this funny money, sit down and shut up. And it's working like a charm. Because despite the chaos, despite the protests, which a lot of them are peaceful, but especially when it comes to the riots and the vandalism and the harm done to property and people, we ain't seen nothing yet. We ain't seen nothing yet. And it's because the lack of opportunity, it's because of the economic and financial strife that so many people in this country face. They are sick and tired of being sick and tired in this country, and rightly so. People living paycheck to paycheck. It's absurd. Now, some of it, of course, is their fault. They don't know how to manage money. But a lot of it isn't. A lot of it is simply a symptom of the overall system. Taxing 30% of you, maybe more, when you add it all up. Federal, state, local, payroll tax, consumption tax, gas tax, your tools, anything else, add it to the mix, property tax. You're paying for it. How much is that? Make you sick. You have to think about it. And some of you know off the top of your head exactly that amount to the penny. That's how sick it makes you. You know that exact amount to the penny. Then you add on the inflation tax. You get it? You understand that's the hill you die on? That's what you go after? That's what makes you, in my opinion, the true patriots? Fighting against a system that has robbed you of your liberties, that has robbed you of your property, of your wealth, of your income, of your time. Your most precious of assets, along with your health. And if you're on the rat wheel because you're living paycheck to paycheck, well, that doesn't bode well for your health either. Like we said in our book, The Cynic's Guide to Investing During the Great Financial Crisis. They saved the system. Yes, they did. But what system? And they're attempting to save and prop up this system again. At whose expense? That of the masses, that of the people. It's just a question of what is going to be the final straw that breaks the camel's back. And you're seeing it around the world, and you're starting to see it here in the United States, as I have said was going to happen. We haven't seen anything yet. Gold and silver, those markets starting to wake up, starting to understand this, especially silver, because gold has been moving up handsomely over the past few years. Silver has been more range-bound. Perhaps it is now starting to break out because it is trading at $22.35 an ounce. This is the spot price, a gain of several percentage points for the day. Gold also up, trading at $1,855 an ounce. As I had stated here, we are expecting a bigger gain in percentage terms with silver, as opposed to gold. Now, gold price, $18.55 an ounce. Personally, I think we're easily going to get to $2,000 an ounce, $2,500, and then I'll reassess to see where we are. Some people think it's going to 3,000. Some say it's going to 5,000. Then there's other people out there that are saying it's going to 10,000 and beyond. I'm not in that camp, at least not yet. I can see it getting to 3,000. I can even see it getting to 5,000. But you have to ask yourself, what is going to be the overall macro environment that causes the price of gold for 1 ounce to be $5,000 in that scenario? So even if you are an owner of gold mining stocks, silver mining stocks, what have you, you ask yourself, in that type of environment, what's it going to be good for? Because if gold gets to that price, we could be in the midst of a complete economic and societal collapse. If it's at 10,000, I can almost guarantee you, as I sit here today, that would be a reflection of a complete and utter global collapse. The only thing that I think could get the price of gold that high is, again, as I stated at the top of the podcast, if the world got together to redo the financial system, to redo the dollar system, the petrodollar system, and said, okay, we're going to peg it back to gold. And with all the debt that's washing around out there, with all the currency that's floating around out there, the price of gold and or silver is going to have to go parabolic. But for governments to get around to doing that, again, you might very well be in that environment of a complete collapse. And that's not going to be a surprise to me. I hope I'm wrong. I hope it doesn't happen. But it could. But nonetheless, you have what's known as the gold-silver ratio. Some people believe in this heavily. Some people sort of say, it's what it is, okay? All that states is how many ounces of silver does it take to purchase 1 ounce of gold. Well, back in the depths of the market sell-off with stocks, we saw a huge sell-off in the price of gold and in silver. Now, especially with respect to the gold price, and we talked about this a few months ago, it was because there were a lot of margin calls with respect to the stock market. So, people had to sell their gold because they were probably making money on gold, so they were taking the profits from the gold market and then going to pay off those margin calls because they were now suffering losses in the stock market. Well, that decline in both gold and silver, especially gold, was very short-lived. That very much was your V-shaped recovery. So if you bought low, you're doing pretty well right now. If you bought in on those lows back in March and in April. At that time, the gold-silver ratio was at an all-time record in the history of gold and silver, as far as we know. I'm talking thousands of years. It was the biggest difference between the price of gold and silver. It was over 100 ounces of silver. Over 100. Can't remember the exact number. It might have been about 122 ounces of silver to purchase 1 ounce of gold. Okay? That can tell you, basically intuitively, if there's any type of reversion to the mean, that silver is well undervalued with respect to the price of gold. So when you see this type of huge move in the price of silver today, it should not come as a surprise. The question is, can it be sustained? Because the price of silver has not breached $22 per ounce since 2013, 2014. So it's been bottom feeding, if you will, or range bound for the past several years. Now, if you go back, and let me pull up a chart here, and I am looking at gold and silver both. But if you go back, and we're looking at silver, 1970s, late 1970s, 1979, 1980, you saw a parabolic move in the price of gold and in silver. But in silver, on a percentage point, based on a percentage basis, it tripled over the course of a few months. That can happen again. That type of move did happen in 2011 when we had silver at an all-time high north of $45. It was parabolic. And then everything that goes up comes down eventually. You had a blow off top, and then you had the gradual decline over the past several years, building a base. And now, because of what's taking place here in the United States and globally, we could be again on the verge of another parabolic move with respect to silver. And if you look where it currently is now at $22 an ounce, and you see a doubling or a tripling in the price over the course of several months, well, you do the math. $40, $60 an ounce. And of course, gold, if silver is going to continue that type of climb, gold is also going to go up, most likely at a slower rate, but nevertheless, it's going to go up. That's what I'm talking about with the gold-silver ratio. Silver price is starting to play catch-up. So instead of that ratio being 100 ounces of silver to purchase 1 ounce of gold, it's now going to be more within its historic tendencies, closer to its mean, its average. $50, 50 ounces of silver to purchase 1 ounce of gold, or 40 ounces of silver, or 30. And of course, it can overshoot, and you could have 20 or 10 to 1. Because there are some people out there who believe that silver, in time, can hit triple digits. That's a possibility. Think if gold hits $3,000 an ounce, and you have a ratio that states, okay, well, guess what? Silver could easily be at $100 an ounce at a 30 to 1 ratio. Or if it's at 5,000, you could have, again, $100 per ounce in the price of silver. You can do the math. You can play with the numbers. If this insanity continues, don't be surprised if it does. Don't be surprised if it does. If it really plays catch up. If it overshoots to the other side. And instead of it being 100 ounces to 1, it's 10 to 1, and you have a silver, or you have a gold price at $5,000 an ounce for the price of gold, and it's 10 to 1, your silver price is $500 an ounce. Again, that's just playing with the numbers. It's basic math. But this is in the realm of possibilities. Because what we are doing is not stimulative at all. It's filling a hole. Not through production, but through the printing press. It's extremely expensive. It's extremely damaging to the financial system, to the economic fabric of this country and to the globe, and to the social fabric of this country and to the planet. The European Union, no surprise, they're now going to be printing another 750 billion euros, which we discussed yesterday. Again, the numbers at this juncture do not matter. It's all funny money. But the bigger the number, the bigger the problem is going to be. These markets are sniffing it out. Uncle Sam's 10-year junk note is yielding 0.6%. Stocks are at all-time highs, one value metric after the next. The bond market says, something still doesn't sound right. And the bond market, again, folks, is usually the adult in the room, is usually the smarter of the markets. It's much deeper, it's much more liquid, tends to follow the macro picture a lot better than does the stock market. Stock market is much more emotional. It's much more, at least right now, conditional on flows of funds. And of course, when you got the spigot turned at full blast, all this funny money making its way in there. No surprise when you have Thunder Thumbs, who is obsessed with the stock market, and you have the Treasury Department that's sitting on over $1 trillion somehow, because we printed it. Where do you think that money's going to go, especially when the Federal Reserve and the Treasury have a nice little deal going on here, and they're using BlackRock as their administrator to make all of these trades happen? It couldn't be more of a banana republic. It couldn't be. But it probably will be in short order. It'll get worse. So the European Union, they're going bonkers. Bank of Japan has been going bonkers. They're not stopping. They're not going to stop. China's going to continue to do what they got to do to fix the books, to make stuff up. Bubble after bubble after bubble. Hong Kong, where's that going to end? Real estate market in Australia, Hong Kong, China, London, Canada. These things still haven't been resolved. The commercial real estate market, the top-down, bottom-up real estate collapse in this country that is really yet to take place, but it's going to. The structural damage that is going to do. People are not going to be going back into the offices, folks. Not en masse. Not when now all of these corporations are finding out, hey, it's perfectly okay for my employees to work from home. They're just as productive, if not more so. We're getting used to the Skype meetings, to the Cisco WebEx meetings, to the Zoom conference calls. We're getting used to all of it. It's perfectly fine. Perfectly fine. You don't have to travel as much, so that's going to whack the airline industry for years to come. It's going to whack car rental companies for years to come, the hotel industry, and everything associated with it. All of those big conferences. Don't need it. All those caterers. Don't need them. Get the picture? This is not going to come roaring back. It doesn't mean at the end of the day that we cannot have a stronger, more vibrant economy because of it, but we're not going to, because we're continuing with the same flawed policies, with the same mess. The bond market gets it. The precious metals market gets it. That's why these prices are taking off. Now, nothing goes straight up, but you could see a parabolic move. We've seen parabolic moves in the stock market. Tesla. It's a rocket ship. It's a rocket ship. It's insane. Amazon is a rocket ship. It's insane. The gains in Alphabet, the parent company of Google, Microsoft, Apple. It's insanity. So it can happen. And yes, I am obviously more biased to the precious metal space because I think it's more of a macro play. I think it's more of a fundamental play on the insanity that's taking place. So you always have to be aware and beware of a blow off top if you would get a parabolic move in the price of gold and silver. You just got to know what you're doing. Got to trade tactically. Got to pull your profits when you can. Yeah, you might be making money with the stock market. Yeah, you might be making money in the gold and silver market, whatever you're doing. And more power to everybody if you are, at the end of the day. But at what expense is always the question that it comes down to. And it's going to be pretty expensive. I take no pleasure in saying that. I just see the writing on the wall. I understand what debt is. You don't need to understand calculus, differential equations, high-powered statistics, and probability to understand this. You just need a basic understanding of arithmetic, some basic principles in finance and economics. You cannot print borrow and spend trillions of dollars and expect everything to be okay. You cannot place more and more debt on corporate balance sheets and expect there to be miraculous growth. It's not going to happen because we started this year, 14% of corporations were zombie corporations. Now it's up to 20. 20%, and I can assure you it will get much worse. Because when you have debt, you got to pay the piper, you got to pay the bill. And now if you're paying the piper, you're not paying the shareholders a higher dividend. If you're paying the piper, you're not paying your employees a higher wage. If you're paying the piper, you're not investing more in research and development. If you're paying the piper, you're not investing more in capital expenditures. Higher dividend payouts, higher wages, more spending on research and development, higher investment on capital expenditures, what have you, can lead to growth. Real growth. Sustainable growth. But you can't do those things if you got to pay the piper. And the bills are getting bigger and bigger and bigger. And that means the growth, the potential growth, is getting smaller and smaller and smaller. This is a very easy concept to understand and to grasp. That's why debt is so devastating. It is so devastating. Compounding interest can work for you greatly, and it can also work against you greatly. And because we have chosen the path of debt, it is going to hurt us, current generations and future generations, and those even yet to be, for years and years to come. We don't have to do it, but we're not even given the option. Where do you want the money to go that we don't have? Those are the questions you're getting from your congressmen and from your senators. How about enough is enough? Why isn't that an option? I guess I'm going to have to write another letter. Gold and silver making big moves. We're going to stay focused on this, as we always do. Take a look into it, folks. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Corritis. Godspeed.